Okay, let's jump right in. If you've ever felt like building, real long-term wealth is this incredibly complex puzzle.
Especially when people mention stock market investing, right?
Exactly, like it's only for financial geniuses or something. Well, if that sounds like you're definitely in the right place today.
Yeah, our mission here is really to cut through all that confusion.
We want to demystify this whole thing, show you it's a powerful tool, and maybe lay out a clearer path.
Absolutely. It's fascinating, isn't it, how many sort of common ideas about building wealth are just, well, not quite
Clear
right.
exceptions.
Exactly. So this deep dive, we're pulling insights from someone with like over 30 years in the markets, real experience.
And the focus is on debunking those myths and finding, practical ways to actually build wealth, proven methods.
Proven methods, that's the key.
And we're going to kick things off by tackling two really big myths, the ones that probably stop a lot of you listening from even starting. So the first one, this feeling many people have that investing in stocks is basically just gambling.
You hear that all the time, right?
Yeah.
That it's like rolling dice, put your money in, keep your fingers crossed.
Right, and hope for the best. But that's a real misunderstanding of what's actually happening.
How so?
Well, gambling, it's usually zero sum, right? It relies purely on chance, luck. Stock investing, though, you're actually buying a small piece of a real company.
Okay, ownership.
Ownership, exactly. You're betting on that company's ability to innovate, to grow, on the economy itself over the long term. It's
Oh, no, no.
strategic.
Not just random chance.
Not at all. Our source really stresses this. If you have the right knowledge and, crucially, patience, it can be, well, pretty safe and definitely rewarding, and it's not a lottery ticket.
That makes sense.
Yeah.
That distinction, it leads right into the next big barrier, I think.
Which is,
The idea that you need a huge pile of cash just to get started.
yes. You need to be rich to invest myth.
Totally. People think you need thousands, maybe tens
Yeah.
of thousands. I mean, I definitely used to think that way. Super common. But the source material here, it reveals something pretty surprising.
Go on.
You can often start with very, very little. Maybe just the equivalent of, say, 500 rupees a month. Or, £5, $5, a really small amount.
Wow. Okay, so it's not about having a massive lump sum up front.
Not at all. The critical thing isn't the size of that first investment. It's how long you invest for and how consistently you do it.
Consistency.
Yeah. That steady commitment, even if it's small amounts, it just compounds like crazy over time. It's incredibly powerful.
Okay, so if it's not gambling and you don't need a fortune to start, what does it take to invest successfully?
Well, after spending, over 3 decades watching the markets, our expert source boils it down to 3 core pillars, 3 key factors.
Yeah, let's hear them. Pillar number one.
Pillar number 1 is time. Now, obviously, we can't control time, right? None of us knows how long we've got.
Sure.
But understanding its power in investing is crucial. Starting early gives your money the maximum amount of time to grow.
Compound interest, you mean?
Exactly. Compound interest, where your earnings start making their own earnings. Over decades, that growth curve is it's exponential, astonishing, really. So it's about giving your money the longest possible runway.
Makes sense. Okay, pillar two.
Pillar 2 is risk and return. It's a fundamental principle. Generally, if you want the chance of higher returns, you often have to accept higher risk.
Right, the classic trade-off.
It is. But the key insight isn't about avoiding risk altogether. That's almost impossible if you want growth. It's about managing it intelligently.
How do you do that?
Well, things like diversification, not putting all your money in one single stock or sector, spreading it out.
Don't put all your eggs in one basket.
Precisely. And also, really importantly, aligning your investments with your personal tolerance for risk. Your sort of sleep at night level when markets get choppy. It's about taking smart risks, not just any risk.
Got it. Smart risk-taking. And the final pillar.
The third pillar is simply money. And this is the part, unlike time, that you have complete control over. Whether you decide to put in that RS 500 a month, or maybe RS 5,000, or whatever amount works for you, the critical thing is just to start.
Just begin somewhere.
Yes. And maybe even more important than starting is sticking with it consistently, month after month, year after year. That steady, disciplined commitment is what really builds wealth over the long haul.
So let me just recap those quickly. The three pillars are time,
hmm Giving it runway,
risk and return,
managing it smartly,
and
the
mo.
part you actually control, starting and staying consistent.
Right. So even though time isn't in our hands,
No, it isn't.
you absolutely control how you handle risk and how consistently you invest your money.
That's it, exactly.
Yeah.
And if you use those two factors, risk management and consistency, wisely, the stock market can genuinely help you grow rich. Slowly, maybe, but surely.
It's a marathon, not a sprint.
Definitely a marathon.
Okay, so for everyone listening, here's a final thought to chew on, and this comes straight from our source material. Don't wait. Start investing today. Build wealth for tomorrow. Something to really think about.